Have you ever stopped to think about what would happen if the money your company held in the bank slowly became less valuable? Not because your business was struggling, not because you were making bad decisions, but simply because the currency itself was weakening. Well, that's exactly the conversation some companies in Japan are now facing. And according to a recent report from CoinDesk, more businesses are beginning to look at Bitcoin and XRP as part of the solution. Now, before we get into this, I want to make something really clear. I'm not saying that every company in Japan is suddenly buying Bitcoin tomorrow. I'm not saying XRP is about to replace the Japanese yen, but I do think this story highlights something much bigger that's happening in the global financial system. And if you're invested in crypto, it's a trend you should be paying attention to. So let's get into it. The story starts with Japan's currency, the yen. For decades, Japan has been known for having incredibly low interest rates. That helped stimulate the economy, but it also created an environment where borrowing yen became very cheap. Fast forward to today, and things have changed. The United States have kept interest rates much higher than Japan, making the US dollar more attractive to investors. As money flows towards higher returns, the yen has weakened significantly. When your national currency loses value, important goods become more expensive, overseas investments cost more, and companies holding large amounts of cash begin asking important questions. Should we really be holding all of our reserves in cash? And that's where alternative assets start entering the conversation. According to CoinDesk, corporate interest in Bitcoin and XRP is increasing through SBI's crypto services. Now, whether you're a Bitcoin supporter or an XRP supporter, I think the important point isn't which asset companies choose. The important point is that businesses are beginning to think differently about treasury management. For years, company balance sheets were relatively simple: cash, government bonds, maybe some foreign currencies, and perhaps a little gold. Now, digital assets are becoming another option, and that is a huge shift in mindset. Let's start with Bitcoin, because Bitcoin has often been described as digital gold. Whether you agree with that or not, you can understand why some companies find it attractive. There will only ever be 21 million Bitcoin. Nobody can suddenly create another 10 million overnight. Compare that with traditional currencies, where central banks can increase the money supply whenever economic conditions require it. Again, I'm not saying one system is right and one is wrong. I'm simply explaining why some finance directors are beginning to look beyond cash. If your currency is weakening, owning an asset with a fixed supply suddenly becomes a much more interesting proposition. Then we have XRP. Japan has always held a unique relationship with XRP. SBI has worked alongside Ripple for many, many years. And XRP has consistently had one of the strongest communities inside Japan. So it isn't surprising that XRP is being mentioned alongside Bitcoin in Japan, because these two assets solve different problems. Bitcoin is generally viewed as a long-term store of value, and XRP is designed around moving value quickly and efficiently across borders. If companies are exploring digital assets, it's logical that both of these names appear in the conversation. Something else caught my attention, because this story isn't being driven by retail investors chasing the latest trend. It's about companies making decisions based on economics, and that's a completely different type of demand. Retail investors often buy because they think prices are going to go higher. Companies buy because they're trying to protect capital, diversify risk, and strengthen their balance sheets. Those are two very different motivations. This also links into something we've discussed on this channel many times before, and that's institutional adoption doesn't happen all at once. It happens one step at a time. First, people laughed at Bitcoin. Then public companies started buying it. Then investment funds entered the market. Then ETFs arrived. Now we're seeing more examples of businesses considering digital assets as part of their treasury strategy. Each individual story might seem small, but when you put them all together, they begin forming a much bigger picture. One phrase you'll hear mentioned is the carry trade. Don't worry if you've never heard of it. Here's the simple version. Investors borrow money where it's cheap. They then invest it somewhere they believe they'll earn a better return. And for years, Japan's low interest rates made the yen attractive for borrowing. Some of that borrowed money eventually found its way into global financial markets. As financial markets evolve, crypto is increasingly becoming one of the asset classes investors consider alongside stocks, commodities, and bonds. That doesn't mean all the money is flowing into crypto, but it does mean crypto is becoming part of the mainstream financial conversations. This is why I think stories like this matter. They're not really about today's Bitcoin price. They're not really about whether XRP moves 5% tomorrow. They're about adoption. Every time another institution, company, or financial organization begins discussing digital assets seriously, the industry takes another small step forward. That progress often happens quietly. There aren't always fireworks, and sometimes it's simply another company deciding it should learn more about Bitcoin. Sometimes it's another exchange launching a service for businesses. Sometimes it's another government introducing clearer regulations. One story on its own isn't transformational. Thousands of these stories over several years absolutely are, in my opinion. I also think this is a reminder to zoom out. Social media often focus on what's happening during the last 24 hours. Bitcoin is up, Bitcoin is down, XRP is pumping, XRP is crashing. The narrative changes every single day. But the bigger trends move much more slowly. Infrastructure improves, regulation develops, institutions become more comfortable, companies begin experimenting, and developers continue building. That's how industries mature. I know some people will say, if Bitcoin is so good, why hasn't every company buying it? That's a fair question. The answer is because major financial changes take time. Large businesses don't usually make billion-pound decisions overnight. They research, they test, they consult advisors, they assess risks. Then, if they believe something has long-term value, they slowly increase exposure. We've seen exactly that process happen with artificial intelligence. We've seen that happen with cloud computing. And now we're watching something similar unfold with digital assets. The same applies for XRP. Whether you're optimistic or skeptical, the conversation has changed dramatically over the last few years. Instead of asking whether blockchain technology has any practical use, more businesses are asking where it fits into their future plans. And that's a completely different discussion. Now, I also want to stay balanced. This isn't a guarantee that Bitcoin and XRP will immediately surge in price. Markets rarely move in straight lines like that. There will still be volatility. There will still be corrections. There still will be periods where sentiment feels terrible. But when I look beyond the daily candles and focus on the biggest picture, I see something encouraging. I see more companies exploring digital assets. I see more financial infrastructure being built. I see more institutional participation than we've ever had before. And stories like this are another reminder that crypto is steadily becoming part of the global financial system. So here's the question that I'm going to leave you with. In companies in one of the world's largest economies are beginning to think differently about holding cash, could we eventually see businesses in other countries doing exactly the same? That's the trend I'll be watching over the next few years, because if the answer is yes, this story may end up being remembered as another small piece of a much larger transformation. I'd love to know what you think. Do you believe more companies will be eventually buying Bitcoin and XRP to their balance sheets? Or do you think traditional assets will remain the preferred choice? Let me know down in the comments, because I'd genuinely like to hear your perspective on this. If you've enjoyed today's breakdown, don't forget to like this video, subscribe to the channel. I cover the biggest stories in crypto, and more importantly, I explain why they matter rather than just reading the headlines. And if you're looking for a community of like-minded crypto investors who want to learn, share ideas, and stay ahead of the market, come and check out the Crypto Wolfpack. We have live streams throughout the week, educational content, market discussions, trading tools, an incredible community that genuinely wants to help each other succeed every single day. Finally, don't forget, every Friday at 7 p.m. UK time, a brand new episode of the UK Crypto Podcast goes live. Paula Talks Crypto and I sit down to discuss the biggest stories in crypto, interview fascinating guests from across the industry, and break down the trends shaping the future of digital assets. Thank you so much for watching. Take care, stay safe. I'll see you in the next one. And remember this, the strength of the wolf is in the pack.